I think everybody's underweight the merge still.
Yeah.
People will get into the merge or post-merge. We'll get this spike. We probably get a pullback. A lot of people will say, see, it's going back to the low. My guess is it corrects sideways, does something or back into the range for a bit, and then we explode higher. So I'm very bullish right now. Short term, we're getting close to the overbought, but I think we've just had a correction. My guess is we go again. What's fascinating is to see the forwards markets and the futures markets is everybody's hedging ETH merge risk. So they're buying ETH, selling the futures. Now, somebody's going to have to lift that hedge off at some point. Now, It depends. And so I find that setup really interesting. And I know the crypto hedge funds are all underweight still because they got beaten up so badly. And so they've been buying calls as the way of having something on for the merge so they can get beaten up by their investors.
Yeah.
So it's like when you see that kind of setup, the path of pain is still higher.
Bitcoin's price is again being challenged by all sorts of elements. It's a fresh chill, says one analyst, as the crypto winter shows no signs of let-up. The cryptocurrency market as a whole is beginning to exhibit indications of weakness, and that's not surprising actually, with capital outflows eroding recent gains. Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul updates about inevitable bullish future of crypto and peaking inflation. He also talks about both markets and adoption of the technology, making the case that crypto will eat the world. So, without wasting any time, let's dive right into the video.
Forget this narrative of true believers versus investors. The big breakthrough of what crypto does is the incentive-based program of you can participate in the network and make money and still believe in it, right? So it doesn't matter. You don't have to be that Bitcoin libertarian who wants to fight for total privacy and total freedom. It's not fucking relevant. It is to them, and that's their fight, and that's fine, right? Everybody has a different reason. But what I'm seeing is massive corporate adoption. I don't think anybody realizes Ticketmaster have distributed 10 million NFTs, right? All of tickets are going on to Web3. Everything. So if we want to talk about how to get to the next 100 million, it'll happen at paces we don't yet understand. There are many of these Web3 projects of corporates that we don't even know about that have put millions of people into this economy. And once you're in, you got the wallet. Once you're in, you start thinking, okay, what else is this? What can I do? And it comes. You see, money and making money is not a use case for everybody. It's a use case for people who want to invest and want to make money out of it. But the enabling of blockchain technology at scale is something we won't even notice. I mean, there's some amazing wallets like Vatum who you don't even know what blockchain your tokens are on. It doesn't matter, right? So you don't do this, long string, all of this. You drag and drop, and it can be Solana, it could be ETH, it could be anything, and it works. It's like, and then it won't become that because then I go to a concert, I get a ticket, my ticket goes into my wallet, that becomes a memento. It may give me unlock to other access, something else. So there's so much coming. So the next billion people are not going to be buying Bitcoin and
ETH. It just has to be invisible.
After the semblance of recovery seen in the cryptocurrency market since mid-June bottom, digital currencies pulled back sharply, along with the equity market. Former Goldman Sachs executive and macroeconomic expert Raoul, however, isn't too concerned about the weakness. The old cheeky pre-merger crypto shakeout I see, the economist said. Also, Ethereum is about to undergo the most significant upgrade in its history, called the Ethereum Merge, which is expected on September 15th. This represents the joining of the existing execution layer of Ethereum with its new proof-of-stake consensus layer, which will eliminate the need for energy-intensive mining.
From my perspective, just to go back on the broader topic, and I'll come into the charts and stuff, I think the macro is the big thing that actually caught most of us by surprise. Not that the macro caught us by surprise, but the impact it has on crypto. Firstly, when you have negative real wages, people have less money to dollar cost average. It's still a retail investment market. And so then the other thing is central bank liquidity being withdrawn. And, if you look at the year-on-year chart of M2 against Bitcoin, they're basically the same thing. So it tells you that as money's coming out of the system, there's less money around. So as you and I know, Mark, from macro from all these years, is that's when you figure out who's swimming without any shorts on, is that moment when there's no liquidity, somebody can't pay for the liquidity that they've been borrowing, right? So that's age old. It happened in crypto this time more than it did in traditional markets. Fine. So that, I think, was the setup. So inflation plus liquidity. So where are we now? We're in a situation where inflation has most likely peaked. From my work, I think inflation comes down very fast. So that fear narrative is gone. And that was holding back crypto. And so you take that away and the beach ball can start rising out of the water. Then on the other side is liquidity. If we start looking at what the bond market is telling us, it's starting to tell us that the Fed are going to pivot at some point. Now, the market's still debating this massively, when it is and how. I'm in the camp that it happens faster than people expect and more aggressively, because I think the recession is coming harder. So therefore, future liquidity is coming up. We're already seeing liquidity coming out of China, which has been a lead in this whole cycle. So therefore, the macro structure looks good. And with the technicals, I had demark signals. Everything was in that kind of June low period. So it kind of really stacked up for me. And I kind of went, just trying to find any penny I had to put it back into the market. I hadn't taken any out, but it was just putting fresh capital in because you want to get in at those low levels. So now we're going into this area of congestion, as you say, Mark, which is whether it's the ETH kind of 2,000 to 2,300 level, or whether Bitcoin, the 24,000 level. And we need to clear that. Bitcoin's been sluggish, but that's okay. It doesn't have to catapult off the low. ETH's obviously got the narrative behind it. Yeah. So I look at how the market is structured, the price charts. I think there's a broader downward sloping wedge that comes in at 23,000 in 2,300 in ETH. I'm mainly focused on ETH. 2,300 in ETH. I think we go and kiss that line. We haven't had 3 touches of the line yet, so normally it pulls back into the range and then goes. So
Paul recently said Ethereum remains the safest, easiest allocation and anticipates demand shock for the crypto. He sees increased demand from institutional investors. Paul took to Twitter to say that although he does not expect Ethereum price to reach new lows, that is, to go below the June 18th low of $902, there could be a gut check quick drop. However, he also pointed out that for him, new lows means that he will buy even more Ethereum, since even now he finds Ethereum's 2-year risk-reward quite attractive.
I do think it goes a bit higher to the 2,300 level, 2,200 level, and then I expect a pullback. Whether that's pre-merge, post-merge, I don't know. I don't really care, to be honest. It's kind of like, what are we setting up here? We're setting up something very interesting, which is a yielding asset that can be the benchmark rate for all of Web3. So I kind of think over time it's going to bring in a lot of institutional interest.
As a result, Bitcoin price, which has corrected while struggling to maintain a price over $20,000, has been subject to extreme selling pressure. Bitcoin had significant sell-offs on Friday night and was just trading below $21,500, down roughly 10% in the last 24 hours. The largest cryptocurrency in terms of market capitalization has decreased by 14% during the past week. In the face of the bearish price action, more than $538 million from 156,156 traders has been liquidated over the previous 24 hours on the cryptocurrency market, figures from CoinGlass show.
But I think, Mark, the point that Scott raised earlier is there are a bunch of people who don't care about adoption per se. They want adoption on their terms. Now, having been around for a while, things don't happen on your terms. You can't dictate terms. However hard you try, you can't. You accept the terms of this distributed network of millions of people who are using cryptocurrency. That will be where it goes. That's consensus. Consensus is not, you must follow my rules.
Yes.
And if not, you're polluting this. because all you're actually doing is driving people away. It's, the more fundamental side of religion pushes more people away than the more moderate side of religion, which is more accepting. It's so obvious, and always in psychology, the thing you fear the most is the thing you manifest.
Meanwhile, the market's adverse price movement is likely related to the anticipated rate hike by the U.S. Federal Reserve next month and the decline in DeFi activity. According to the Wall Street Journal, St. Louis Central Park President James Bullard wants a 0.75% rate increase by the end of the month. Reuters reported that Mary Daly, president of the Federal Reserve Bank of San Francisco, also indicated a 0.75% rate hike next month.
Go ahead, Raoul.
Particularly the institutional style clients and the RIAs and the people you deal with and I deal with on the asset management side, is they're always looking over their shoulder because somebody's always saying you're being an idiot. Because financial markets are all a history of all of us being an idiots and making wrong decisions. And they are scared of it. They're really scared of it. It's very hard to get them to have enough conviction. But when they do, they stick around. But you can see it. They get very wavery. But I explain to people all the time, it's like, we've already said it's a 100 vol asset class. It will have 75% drawdowns. And those are opportunities. Every time it does, it's a life-changing risk reward. So even if now, I think we all think the low is in, but let's assume it's not. Let's say there's another 50% downside from here. Well, the upside, when you get to these kind of levels after the sell-off, is about 10 to 20x. So 50 basis points downside, 10 to 20x upside is like, Mooch, we've been in the business for a long time. You never get these opportunities in your lifetime. You might get one if you were lucky in some VC deal, but in an entire market that goes up 20x, and it does it periodically in this exponential trade, we never get this.
According to CoinMarketCap data, overall worldwide crypto market capitalization stood at $1.05 trillion, down $70 billion in the last 24 hours from its $1.12 trillion value a day earlier. Futures associated with the tech-heavy NASDAQ 100 declined by more than 1%, while the dollar index surged to a one-month peak of 107.78, reflecting downside risk. So, do you think the Ethereum merge will spark a new bull run? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.